about here, and the reason for that was right here. Right, so this was the idea that it would come back down here, in between, somewhere between here and wherever it paused and turned back. That was the idea. So we were looking for this bounce. It did not bounce here, fair enough, and it moved a bit lower, fair enough. And this is where the trade is coming from. This is where it was supposed to stabilize and come back up. It's violating the third standard deviation. It's violating the 200 moving average, and all that stuff is happening. However, this is what we were watching right from the get-go, right? Everybody should be aware of this. We've been watching this trade. MACD crossed to the downside, and this happened. Uh, about 50 basis, 60 basis points, right? From 4, we knew it was, all right, guys. Hey, Vita, take it easy. All right. 4, from 402, we knew it would come back down, and I wasn't expecting it to break the third standard deviation just yet. However, the trade was there for it to come back down. The MACD was supposed to cross, and it was supposed to come back in. Now the bounce is also, pretty much guaranteed here. Why? Because we have the RSI pulled down, this thing is pulled down, this thing is pulled down. However, whatever the bounce would be, now here's where it gets very unclear. It gets very unclear, in fact. Now this thing, as we've been talking about the US 10, this is a double-edged sword, right? When this thing goes up, you would have expected the stocks to kind of not stay tame. Basically, the tech, which is the driver of majority of the market, when the interest rates go up, tech stays down. Now this is happening where the interest rates are coming down. Besides tech, everything else is moving lower. Apple is still holding, and that's why we're still looking for that bounce. Now here are a couple of things that would happen. Now let's say this thing bounces, right? And if this thing bounces to a proportion how it came back down, 60 basis points, if it does bounce the way it did, come down within 3 sessions, if it does that and goes and hits 3 or rather 4 within 3 sessions, that would wreak havoc on tech, right? So that's a no-go. It should not do that. If it does, then you have tech moving lower, and if you have tech moving lower, the decline in SPX will not be like the one that you saw just because some financials were coming down. It would not be like that. It would be precipitous, right? Let's imagine Apple coming down 7% points. That would be horrific. To say the least, you would have SPX about 5%, right? We don't want that to happen. So even if we want to move this thing up, we want to see this thing go up gradually. Maybe come back into the third standard deviation. Basically, it will come back and test this number, 3.49 area. It's almost there, and if that clears, it will hit this third standard deviation. If that clears, very likely it will come back in the second standard deviation, and then very likely it will face decent enough challenge here at the 50 on the day, right? As of now, even I think this is a hard ask for it to come back up into the 50, about 3.68 or something. However, we'll watch that. Maybe it could happen today, tomorrow, or sometime. But doesn't matter what happens, even if this bounce comes through. Maybe this game would be, this bouncing of US 10 will happen. I don't know, till 22nd, uh, next week, basically next week, Wednesday or Tuesday, whenever you have FOMC decision. If FOMC goes 50 bips, this will again come back up. If FOMC says 25 bips, probably you'll see it come back up here again about 3.8, which is where the 8 is sitting right now, and the mean reversion might happen about 388, which this is where it is sitting right now. That might change as the data comes in, probably day after tomorrow, probably tomorrow and day after tomorrow when you have CPI and the PPI. And this week you have China retail sales, then you have Eurozone data coming in, and there's a bit of other domestic data as well, such as manufacturing index and manufacturing index, all that. So I think if you have if you have a stability in US 10, then very likely you will see the market stabilize. If you have the continued volatility in bonds, And if you want to track the volatility in bonds, you can look at there's something called bond VIX. You can go look at that, right? If you see bond VIX coming down, then you can tell that this VIX right here, the stock VIX, the S&P VIX, this will also come down. And if this VIX come down, very likely you'll see this market stabilizing there, right? So that's how that works. Now, why am I saying that whatever this bounce, that would be ephemeral, because you still have this thing down, right? So this thing might calm down a bit, might, because right here it made a big decent red bar, so it might make another same size or maybe lesser size bar. So things might calm down a bit, and also it's breaching the third standard deviation here, and also it is at the lower end of the spectrum, the RSI here. Let's see where things might go. The RSI on the week is also hitting the lower band here, so we might expect a bounce. However, to the downside, if it starts to move lower, this is what we are expecting it to come down into 3.38. And I mean, there's decent chance after the bounce, once the technicals are resolved, it will come back down to test the 50 moving average on the day. If that breaches, then you can expect it to come back here into 3.30. Not really plotting anything sub 3.3 at the moment. When I say at the moment, I think I should say until till FOMC, right? I think till, oh no, you have data tomorrow, right? Tomorrow is CPI and you have PPI. So that might change. If it were not for that, data where that data could move inflation point, I think I would have said that I'm not looking for anything sub 3.3, right? But still, let's go with that. Let's say we have a floor at about 3.3 on US 10, and I think we'll see another bounce there. Right, and to the upside, we still are expecting it to move up. There you go, it's hitting that 3.48, 3.49. That clears, it's going to go hit this number, 3.5 one area, and if that clears, it's going to come back into the second standard deviation here. And if you want to track it closely, this is the chart that you want to see. Right, right about here, third standard deviation violation is going into second, then it's going to go hit this number. Very likely take a breather here, 3.52 area. Right, and I think as long as you have US 10 stabilizing, you will have DXY stabilized, and that could meaningfully stabilize the this thing as well, SPX. Now let's try and put some numbers. Today, I think I'm not sure how effective putting a number on it would be. However, to the downside, you still have this, the second standard deviation on the week, because it hit that number. So we'll keep that as a floor right now, 38.16. Of course, this is US 10 dependent, right? If US 10 starts to crater back into that 50 moving average and then starts to move into that 3.30, then you'll obviously have this thing move lower, right? And if it reaches here, which I am not thinking, unless President makes some weird remarks, I don't think it's going to breach here. I think we should be looking for a bounce. However, let's say if it does come back and breach this, then next stop would be very likely 37.30 area. Might not be the case for today, but that's where the story is going. And to the upside, one standard deviation seems like a clear candidate here on the higher time frame chart, 38.99, about 3900. This is ES continuing contract, March contract. Um, let's go here on the day. Yeah, this thing is still down. Right? The MACD is MACD. This is what it works. This is how it works. This is what it does, and then it's one of the very reliable indicators. Now, here this thing is getting oversold. However, you keep getting these bounces. For me to be having a convincing bounce, a convincing pattern to the upside, probably go up all the way here into this 3900 or 3914 area. I would want to see this thing curl up, right? I would want to see this thing curl up, then very likely we'll see some more pale red bars. Until then, I'm not really keen on that. I'll still leave my longer dated puts and probably hedge that with shorter dated calls for these kind of rallies, right? The kind of rally that we're expecting. Maybe it will come back into this 39.14. If it clears that 3900 area, then maybe we'll see this 39.50. This is ambitious. This is not realistic, but this is ambitious. But let's leave that number up there. You have a 5 here, 3907, and right now it's not detached from 5, but still, let's leave that number in place. As of now, that bounce is happening, and let's see. Let's go here on that lower time frame chart. 5 that clears the 8, 38.48. That clears right about here, 38.54, and the mean is sitting all the way up here at about 38.67. That's a lower time frame. I'll again trade the same way that I trade 0 DTEs. 5 exit. If it clears the 5, I'll take the trade again to the 8. 8 hits, exit. If it comes back up, I'll take the trade to the next point. Let's see this chart. If this chart is, yeah. So it looks like, given everything equal, right? If everything remains the same, if you don't have any further data coming out, negative data on the banking, or if you don't have the US 10, pushing lower further, and very likely you have the SMI cross to the upside, and the 5 is detached, and you also have this half trend sitting right here about 38.58. This seems like a decent target, and if it clears there, then we'll look for the 8 again, right? You have a half trend, you have a 5, and all that thing going here, and this thing is triggering a this thing is triggering a buy here. So I'm still not in this trade, by the way. I'm still not in this bounce trade. Might be I wanted to see president's remarks. I don't have the link, but I'm not sure if it started. Generally, the president is always late, so I'm assuming that he hasn't started yet. But if the rally happens, very likely this is what I'm looking at. If that clears, then this is what I'm looking at. If that clears, the mean right now is sitting about 38.92. Looks decent enough, but execution will remain a very very challenging thing. Execution, why? Because the what do you call, the premium, the IV is super jacked, and that's inflating the premium. So for even for us to hold that trade into all that, 5 and 8, that's going to be a challenge. That's execution today is going to be a challenge, unless as I said, I 2 weeks out. In fact, I'm out in June somewhere, multiple strikes. So even I have a 3200 or and a 33,000, right? So in the June, that's fine. That's all sitting there, and some of them are converted into what do you call these spreads. So I think it's fine there. If it bounces, right? If it bounces, I will go with 0 DTs or even 1 DTs as a hedge to my longer dated puts. I think you'll see a shift in the market tone either tomorrow with the CPI print, or on the 21st, 22nd with the what do you call this with the what do you call FOMC, right? Either one of those will mark a decent shift in the market. CPI tomorrow, if the CPI comes in lighter than expected, then you will again see the market, starting to push to the upside, because you would expect, if the CPI comes in lighter, you would not expect the Fed to be that aggressive the way that the Fed was. And if again the CPI comes in hotter than expected, then very likely you will see an aggressive Fed again. So that's the idea there. I'm not sure which way to lean with the CPI. If I look at the data, previous PPIs, if I look at unemployment data, if I look at claims data, everything is suggesting that the buying, or rather, people are still spending. So that spending will obviously result in a higher CPI. And also used cars, right? Used cars is one of the main key ingredients that goes into CPI. So that sector is still hot. So if I'm going by those numbers, I think the CPI would be hot. However, the housing is now a major part of CPI, and if housing and specifically rent, the shelter, if that is cooling down, then you will have a market slowdown in the CPI print tomorrow. And again, if the CPI print is lower than expected, I'm expecting a decent bit of short covering to come in tomorrow. Right. Cool. So this is what we are expecting to the upside. If that happens, then we are expecting it to go all the way till here, and to the downside, we are expecting it to come back down into this number. If it breaches the second standard deviation, then we'll watch for the third standard deviation, which is sitting about 37.30. I'm not sure. I'm not sure which way to lean in the markets today, but as the data, because technicals are out of the window right now. Technicals, no, nobody cares about technicals right now. Maybe maybe the algorithms are still functioning, but the technicals at this point are not relevant. Right, let's get into a bit of Apple here. Higher time frames still holding the 8. If that breaches, very likely, if the 8 right now is about 147.50. That breaches, expected to come back down into this number, upper in a Bollinger Band, 147.30. If that breaches, especially if you have the interest US 10 moving violently higher, and you will see very likely some push down in Apple. And if Apple, in fact tech, if in fact tech pushes down, then there's no point, then there's no point looking at anything else. You'll just have to get involved with puts, right? So, and it all depends on how US 10 will react and how the DXY will react to that US 10 number. As of now, DXY is moving lower, and you see tech holding. Apple was positive a bit ago, a while, just a bit ago, and now it's negative. So if you have this thing, DXY moving lower, then you'll have some stability with Apple. And if I think in the long run, Apple is still expecting to go hit this number here, right? It's still expecting to go down here and hit this mean on the week. It did do that once, and as the history suggests, that the price cannot just go hit one time and move. So I'm thinking that it will come back down, especially if it reaches the 8 on the week. Then very likely it's going to go hit this 21, and then very likely it's going to come back down here into 144. As of now, that's the downside target. But then again, right, this has to breach and this has to breach, then we are expecting it to come back into the mean. 144, that's the downside target. It's about 4 points from where it is right now. I'm not saying it's going to it's going to hit that target today, but keep a close watch on that. And to the upside, you'll still expect it to hit the 5, 148.80. That clears the 50 moving average at 149.30. If that clears, very likely it's going to go up to 150.20. So that's so it's very unclear. This trade right now is very unclear. I'll be cautious with the way that I'll be playing. On Friday, I was expecting Apple to come back down into this number, 147.50, hit the 200 moving average, and then we would be looking for a bounce. Did not happen on Friday, so very likely today this is the downside, immediate downside. If it hits that, very likely first bounce, and if it breaches there, then expect it to move down into this 146.50. That breaches, very likely it'll come back down here into this 144.70. Then again expect a hit of 144 area. That's the way it's going to go. To the upside, very like if it bounces, say here it bounces, then expect it to come back up into 21 on the day. Decent resistance here, 149.30 to 149.50. If that clears, we'll look for the mean reversion. As of now, without the new data coming in, these are where the numbers stand. But as and when the market opens, the data starts to populate, these numbers might change, right? So let's keep a close watch on that. Apple 1 hour chart, oversold conditions. So let's say if, wow, look at that, hitting the third standard deviation and trying to bounce. Cool thing. The upside, if it clears right here, the half trend, 148.10 area, then expect it to come back up into 148.30, then expect it to come back and hit 148.50. And if it clears this number right here, 148.90 to 149 area, then we'll start to price in the possibility of the mean reversion on the hour, and very likely go hit this number, the half trend on the upside, 149.80 area, right? So that's the idea there to the upside, and we've discussed the downside on the high time frame. This thing is still oversold, and the way it works, same thing, overbought, oversold, overbought, oversold, right? This is rational actually. Let's go. Let's go see what Microsoft. Right, marginally up, fair enough. And I think if Microsoft starts, Apple, in fact, if Apple starts to move lower, then it will drag Microsoft with it. Then we are expecting a mean reversion, 245 area. I think it should come back down into that area, about 4 points from where it is right now. If that breaches, we're expecting it to move down into lower in a Bollinger Band. But let it come back into mean. If the mean breaches, then we'll start to price in the lower in a Bollinger Band. And to the upside, the 21 to 49.60 area, that clears the 8 to 51, that clears the 5 to 51.80. I'm not sure if it's going if it's going to do that, but this should act as decent resistance, and then this, and then this. Especially if Apple bounces, you can expect this thing to bounce as well. However, I think even if these bounces happen, I think these will be ephemeral bounces, and I think the sentiment will pull it down. But I'll be cautious. I'll be cautious again. The way that I am trading, the way that I am formulating a trade is longer dated puts hedged with shorter dated calls, 0 DTEs or 1 DTEs, either ways, right? Right now, my puts, the December puts, the June puts, even the September puts, all are about 200%, give or take. So yeah, I'm expecting it to, even if it comes back down, I'll convert those into what do you call spreads. When I say convert, it doesn't. It's not a. All I'll do is simply sell a strike down. Let's say I have a 3200, right? Let's say I have a 3200 June put, and then it's about 200%. So what I'll do is I'll sell 3190, right? That will convert it into a spread. Now it doesn't matter what happens. My money, I got my profits. That's the way I look at things. Right. So right here, Microsoft, if it breaches the 50, it's holding the 50 so far. If it does, in fact, breach the 50, then expect it to come back into 100 on the day. Very likely about 244.50. That seems to be a target, even on the weekly. That seems to be target 244 area. If that breaches, expect it to come back into this number, 242, then very likely to 41.50 area. Uh, and right here, this is actually hitting the bottom. So this might trigger a bounce here, and it is hitting a major level here, so it might actually trigger a bounce. Let's see how much of a bounce. I'm not sure. The sentiment is still negative. People are still trying to buy puts. Oversold conditions, it is bouncing. Yeah, it is bouncing. Let it come back 5 8, expecting the same kind of price action from Apple as well. Go back up, clear this half trend, go hit the 5, go hit the 8, and hit this half trend baseline here. That clears, we'll expect it to move up all the way to the upper half trend line. Of course, you'll have decent resistance here, and as of now, this is where the data is. And let's say, after a couple of hours, if it is still stalling here, then you will see this thing, the mean start to come back down, and the half trend starts to narrow, right? So yeah, and Apple and Microsoft both doing the same thing. When Apple and Microsoft both did the same thing right here, this was the result, and we had a nice rally in SPX. So keep a close watch on that. Let's go Tesla. I think we still have 5 minutes. Tesla was oversold here. It's not oversold here on the lower time frame. But if Apple does bounce, then it will, Tesla will bounce along with it. This is a high beta name. Very likely, if you see Apple bounce, and you'll see Tesla bounce as well. So if it clears here, and expect it to come back up into the 170 area, that clears right about here, 171 area. I think this 169. I think we did discuss this 169 at some point. Uh, yeah, probably it's going to come back. And to the downside, if it breaches this number where it is trading right now, then expect it to come back into 160, 180 area. And to the upside, this should act as decent resistance now. It was acting as a decent support while it was coming down, and today it should act as decent resistance. If the mean and the 200 moving average on the week, if that clears, then expect it to move up all the way into 183. Although I'm not sure why would it do that, but if, let's say, if short covering comes in and if you have a decent rally, then very likely it will come back up into 182, especially if it clears the mean. Let's see here. But again, I'm telling you, technicals will not matter today. Technicals will not, maybe the math might matter, 2% or something like that, 2.2, 2.5%, but the technicals will not really matter today. Expecting Tesla to bounce right at the 50. Wow, it is holding this number. Okay, so it's holding right here, and if it breaches, this is the one to watch. for a bounce. RSI looks like it is wanting to trigger a bounce here. Then very likely, if it doesn't bounce here, then the 50 should 50 moving average, give or take, maybe 10, 15 cents here and there. This should give a decent bounce. How much of a bounce? If it comes back up, expect it to come back up into this line again. That clears, expect it to come back into the 100 moving average, 176 area. That clears, then we'll start to reassess the second standard deviation and the 5 on the day. As of now, where the 5 stands at right about here, 180 area, this will change as and when the data gets populated. I think the 5 and the 8 both will move to the downside, probably about 179, or even it could be at about 178 area. Let's see how that plays out. Anything else in particular? Oh yeah, one more thing. This guy. This guy should have been negative crypto, given what has happened with Silver Bank, what's happened with Silicon Bank, Silicon Valley Bank, and all that. This should have been negative. All it did was wick down to the mean on the week and moved up. That's how it worked out for that. So let's say if it starts to come to the downside, which it should at some point, I don't know what will break it, but let's say if it starts to come back down, then you're expecting it to hit this 21,400, then very likely it will come back into the mean. And to the upside, right about here, 22,900, then the 50 moving average about 2,300, right? So 2,300 area should act as pretty decent resistance for Bitcoin. And if it does clear that 2,300, then I would assume there is decent strength in it, and very likely the next spot is this 24.4. Let's look at the daily as well. All right, that's some decent bounce there. Right, let it do its thing. Maybe it's going to go hit this number, right? The 50 moving average on the daily, and maybe a breather here. How deep of a breather? It might come back into 22.5 again. But if let's say if this time it goes up and clears this number, then expect it to go back up all the way into 23.8. And if Bitcoin doesn't die, very likely tech is not going to die. Tech, in the sense, Nasdaq is going to probably remain buoyant today. Yeah, so let's see how that works out. And also, I think there's 1 minute, but I'll keep an eye on oil as well, right? All right, let's move into live trading.